Happy Thanksgiving week. It is Monday, November 24th, and so we are expecting probably lighter volume in the stock market trading. However, the broad markets have been at a really interesting juncture and consolidating. So I wanted to take a look at a broad market a different way. So my go-to is the ES futures, right? And that's based on the S&P 500 cash index. Let's look at its related market, the SPY ETF. So ETF stands for Exchange Traded Fund, and SPY is the S&P 500 SPDR ETF, right? So you can look those up to find out more about the differences between ETFs and futures. Here I'm going to focus on the similarities. I'm going to look at price action candlesticks, market timing or forecasting and momentum using the RSI power zones because I'm HEMA ready. That's what I do. Let's dive in. So on Friday, October 21st, I analyzed the weekly charts of several broad market futures contracts, starting with the ES. And I pointed out how it was kind of testing a key support from the week ending October 10th. So the first thing is if you're going to compare two very similar markets, make sure you're on the same time frame. I mean, it seems obvious, but if you're rushing, you may not notice that one chart's weekly and one chart's daily or some other permutation. So I have a SPY weekly chart, right? I'm confirming that here. And as you can see, it therefore has a very similar look. Now, it's going to be different in that the pricing will be different between futures and ETFs. However, they will be a very similar type of candle pattern. So let's zoom in to the most recent action on the ES and the most recent action on the SPY. And I'll spend a little more time on this one, and then I'll go through the others, the NASDAQ and more, with a little more pep in my step. Okay, so the SPY and the ES. If you just kind of glance back and forth, you can see a couple similarities. The RSI power zones both recently disconnected, right? It had a bull bear RSI FaceOff, the bearish version, that led to, or coincided, I should say, with a decline. Because the bull bear RSI FaceOff is not the trigger for the movement. It's just the warning sign that's going to happen. Okay, price moves on its own. The speed behind the moves just gives you a heads up before the turn occurs. It similarly came back to the October 10th low, week ending October 10th low, tested it and is holding. So I still think this broader consolidation is in place. I'm going to go to the daily chart on these two markets to see what they have that's similar. Again, you don't have to go too far back. You can just kind of take a look and see, all right, that support line that we were testing on one is being tested on the other, and we're recovering. So in the very, very short term, I had already written this in my morning ES report. I was expecting further upside. It's happening. We got to get above Thursday's high, though, to make things really exciting, that November 20th high, in terms of this being a bigger picture buying opportunity. All right, so that's all I'll say here. Now let's look at the next pair. This would be NQZ25. I'm going to stay on the daily. And the corresponding ETF is the QQQ, okay? So again, very similar situation here of testing key support from the week ending October 10th. This chart looks so similar to ES, it's not even funny. One thing I'll say though is if you saw on the daily chart of the ES and you look at these two NASDAQ markets, it got more oversold, okay? If you watch this video, you rewind back, you'll see that the ES RSI power zones reading, the recent trough, was not quite this low. It was closer to the bull support power zone. So that tells me that the move lower on the NASDAQ markets has been a little more extreme, right? Beaten down a little more. And that makes sense because a lot of the weakness recently was in tech stocks or AI stocks. So they still have the same barrier they have to climb, the November 20th high, to get things going in the bullish sense. But they definitely got beaten up a little bit more. Now let's look at YMZ25. Okay, so this is the Dow, and its comparable ETF is the DIA. All right, now here, as I discussed last video on the weekly charts, and now we're on the daily, okay, we are above the October 10th low in these markets. In fact, the DIA had a retest on October 14th, and that's the key support. So the DIA, the YM, the whole Dow complex remains a little bit more robust than the S&P or NASDAQ. Still though, same thing. I sound like a broken record. November 20th high is what I want to see us climb above to get excited about any near-term move higher to retest the all-time highs. All right, and last but not least, RTYZ25, right? That's the mini Russell. Now, what is a comparable ETF? It's going to be funny looking if you're new to this. It's IWM. I have no idea where they got that from, but that's what it is, okay? It doesn't start with an R, not even close. But hey, the symbol is just all you need to get to the chart, the price action, the market timing, the momentum, that's what matters. So on this chart, what do we see? Well, on the daily chart, we came to support from an old week high, all right? So if I'll change this to weekly for one moment so you can see, the week ending August 1st, we came back to that old high, held beautifully as support, and finished last week as a hammer. Now, a weekly hammer candle is not the same as a daily hammer candle, right? A weekly hammer candle is now going to need a whole week to see if it actually has legs, if it stays as a bullish pattern. So don't trade a daily chart off a weekly hammer thinking, oh, I got a hammer, it's bullish. No, you have to let the comparable time unfold. That being said, we did have a very bullish candle on Friday, and we are seeing it upside. And the whole Russell complex is much closer to turning higher above that October 20th high. So here I'm going to mark it so you can see how close we are. In fact, might already be there. Yep, we're already starting to edge above it. So when you're looking at the complex of small cap to large cap, sometimes small caps will turn faster than large caps, but not always. It depends on what are the things that are really driving the index movement. Because every time you look at these, you have to remember this isn't one unit, right? This isn't one company making one widget. It is a group of stocks. And in the case of the Russell, there's 2,000 small cap stocks. So while their market cap may not be anywhere near the S&P 500, the way that these indexes move is going to be on the behavior of all the stocks in there, especially the ones that are weighted more heavily. So bottom line, just based on what I'm seeing here today, okay, no crystal ball, y'all know that. Gonna keep saying it though. I think we're near seeing the resolution of the most recent weakness from October 27th. So basically November so far, right, we still have a few days left in it, was kind of, ugly in terms of it being a red month. But I do think that there's a chance that we find a footing here. This would not be surprising because there tends to be a pickup in the stock market around the holidays. It's not an exact science, but it's still something to keep an eye on. So I hope that helped those of you who trade ETFs or monitor ETFs closely so you can see the kind of way that I look at it. It's very similar to what I see in the futures. So the key here, again, if you're going to look at any two related instruments, meaning they are based on the same underlying, make sure you're on the same time frame, make sure you have the same types of indicators on there, and don't be surprised if key levels and market timing points and all of that are similar. That's by design. There are, of course, reasons to trade one versus the other. That's up to you, your trading capital, your risk style, and so much more. I'm just here to kind of go through the charts and make sure you're getting some lessons. So if you got good, helpful takeaways about market action here to guide you into the Thanksgiving week, or if you're watching this video and getting lessons out of it, right? Tips about how to do side-by-side chart analysis and more, go ahead and hit that like button, and I'll see you in the next video.